Good morning. We will pay attention to the ledger accounts for partners. The following information was obtained from the accounting records of North-South Traders. The bookkeeper is on leave and they asked you to complete the ledger accounts. Now, first of all, they give us the information in the partnership agreement. So they've completed the profit and loss account and determined the net profit, and we have to do the rest of the entries to complete the salaries and the interest and the profit that the owners will get. Now, they give you some of the information in the ledger accounts, and we will transfer this information to the actual accounts that we will complete. If we look at the first entry, it is the 8,910. The interest on capital account was credited, and this amount was transferred to the appropriation account. So this is your closing transfer. Before you could complete a closing transfer, you first had to complete an adjustment to record the expense in the interest account and show that the amount is outstanding in the current account, because this money must still be paid to the partners. So they give us the amounts for interest for North and South, and we will first complete the entry for the adjustment for the 4,410 and the 4,500. So the interest on capital account will be debited with 4,410 and 4,500, and this is an adjustment. And we will credit the current accounts to indicate that this money is outstanding and we owe the money to the partners. So the current account of North will be credited with 4,410, and the current account of South will be credited with 4,500, and this is to complete my adjustment. So before we can do closing transfers, we first have to complete adjustments, debiting the expense salary, crediting the current account. The next entry will be completed for a closing transfer. That means that we will close our expense account interest on capital with a total amount of 8,910, and we will debit our appropriation account with the amount. And the appropriation account, we will divide and show how much interest was for North and how much interest is for South. And this is the double entry for the closing transfer. The balances and the amounts in the drawings account and in the current account will be transferred to the account where we will complete all the entries. So we will complete these figures on the drawings account on the debit side, and we will show in the current account of North a debit balance of 2,500. That indicates that he took too much money the previous year, so he actually owes money to the business at the beginning of the year. The current account of South has a credit balance that indicates that he didn't take all the money he was entitled to the previous year, and therefore the business owes him money. If we look at this appropriation account, we see that they transferred the salaries to the appropriation account. So before we can do this closing transfer, we first have to use the figures and show that we will transfer the salaries to the salaries account and prepare an adjustment. We will debit the salaries account of North to complete an adjustment, and we will credit the current account of North to complete the double entry for the adjustment. And that indicates that the expense was debited because expenses increase on the debit side. The business owes the money to North, so the current account is credited to indicate that this money is still outstanding and must be paid to North. We will complete the adjustment for the salary for South. We will debit the salary account to complete the expense. Expenses increase on the debit side, and we will credit the current account of South to indicate that this money is still outstanding and we owe this 23,300 to South. Then we will close our salaries account, so we will complete a closing transfer, and we will credit the salaries account to close the account, and we will debit the appropriation account to close the nominal account and transfer it to the appropriation account. So the double entry will be completed on the debit side of the appropriation account to indicate this is the total amount that will be divided between the partners as salaries. Partners are equal partners. That means that the remaining profit will be divided equally between the two partners. The profit for the year was given as 67,110, and this was transferred from your profit and loss account. So that means that the profit and loss account was debited and the appropriation account was credited. Out of this 67,110, we took 8,910 for interest and 36,000 for salaries. If we subtract that, it means that the amount that's left over that can be distributed as a final distribution of profit between the partners is 22,200. We said they are equal partners, so it means that both of them will get 11,100 Rand additional profit. The appropriation account is debited to calculate what is the profit, and then we will transfer it to the current account to indicate that this money is still owed to the partners. So the current account will be credited with 11,100, and that is for the division of the profit that we transfer from the appropriation account to the current accounts. So our first step is to complete the adjustments, debit the expense for interest or salary, credit the current accounts. The second entry is to transfer the expenses to the appropriation account. So we credit the expenses and debit the appropriation account. Step number 3 is to calculate the profit that's remaining in the appropriation account and divide it between the two partners in their profit sharing ratio. That means we debit the appropriation account and we credit the current accounts. Now in the current account, we show the total amount that's outstanding that must be paid to the partners on the credit side. But they've taken some of this money, so we will go to the drawings account and transfer the drawings account to the current account so that we can see what is the actual outstanding amount. So the drawings account of South will be credited. This is a closing transfer, and it will be debited in the current account of South to complete the closing transfer. The drawings account of North will be credited to close the account and to transfer it to the debit side of the current account. If we look at the current accounts now, it means that the amounts on the credit side is the amounts that's outstanding that must be paid to the partners, less the amounts on the debit side, and that will give me my closing balance to indicate the actual amount that's outstanding that must be paid to the partner as 23,100. In the current account of North, we will also add up the amounts on the credit side to determine how much money is outstanding that must be paid to the partners. We subtract the money that they've already taken as drawings, and that will give us the total outstanding amount. What did we learn? Step 1 is to complete an entry for the adjustment. That means you will debit salary or interest on capital, and you will credit the current account to show that you owe the money to the partners. Step number 2 is to complete a closing transfer. To close the nominal account, so it means you will credit salary or interest on capital, and you will transfer it to the appropriation account on the debit side. Step 3 is to calculate the profit that was in your profit and loss, transfer it to your appropriation account. Then you will look at the remaining profit in the appropriation account. So you will take the profit less salary less the interest on capital to determine how much profit is left over, and we will divide it between the partners in their profit sharing ratio. To record the remaining profit, we will debit the appropriation account to close the appropriation account, and we will credit the current accounts to show that this amount is outstanding to the partners. Then we will transfer the drawings to the current account, and the balance after all these entries were completed will be the actual outstanding amount that will be recorded in the balance sheet.